Hi there, this is Chris from MoneyHub, and this video looks at our comprehensive guide to personal loans. So just as a background, we've written this very comprehensive guide about personal loans. It takes you through the latest offers from a range of lenders. We've comprehensively compared the market, and we've listed those which offer a better deal than the ones which don't. And there are a lot of people that offer bad personal loans, i.e. very high interest rate. We've also put through some must-know facts, then just generally, some alternatives. So I'm going to go through that now, but I want to make a first comments here. The interest rates being offered now on personal loans, they will be continuing to increase, and this is because the official cash rate, which has been low for a very long time, that is now going up. So the problem there is that before we've seen interest rates for personal loans maybe 8, 9, or 10%, still expensive, but somewhat affordable. That is now increasing, and this is going to become a huge problem. So we're not telling people, of course, to rush in and get a personal loan now. Completely the opposite. We'd really like people just to think about it, look at the alternatives, because we know that interest rates are going to get really high and it's going to become a big squeeze. We've also written some things recently. This was from October 2022, and this was a guide. This was a question from to Francis Cook, the podcaster around financial and personal finance. We then wrote a very comprehensive response, which you can see here, and this article is linked below. Basically, what we're saying is 25%. It's not that uncommon. There's a lot of things that you can do to avoid it. But if you are looking at personal loans or new personal loans or refinancing, then there are alternatives to these high interest rates. So just bear with me while I quickly go through what you need to know. So as a background from our guide, which is also linked below, I thoroughly suggest having a read through it in full. Please don't rush because personal loans are very expensive, and rushing through it just means you're not as possibly as well informed, which means that you may not get the best deal for you because you don't know like everything that we think is important. So please do look through it. If you are looking for other kind of loans, car finance, debt consolidation, or refinancing, then we have separate links to those, which I've also linked below in this video. Now, notwithstanding the offers, which are constantly changing, there's some must-know facts I just want to briefly explain. So, who can actually get a personal loan and what do you have to use them for? So, the reasons are really unlimited. Most people use them for debt consolidations or big one-time expenses. At the same time, we have heard of people like applying for them to help with cost of living. We don't think that's a great idea just in the long run, but we are sort of researching and writing guides on this right now. Because of course, while you get the money now, it's going to have to be repaid, which adds to your cost of living, and it's just not always that ideal. Other people get personal loans for medical bills, children expenses, car repairs, things like that. So don't really worry about too much about the reason. You'll have to explain, of course, in the application, but always just be honest. If you are going to apply for a loan, for a personal loan, please do be honest because otherwise you'll be in a lot of problems when if something happens or anything else. It's always essential to be honest. People ask us what's a secured loan, what's an unsecured loan. So a secured loan is when you actually put some security against the loan, usually a car or something else. You could put it against your mortgage, although that's not, or it's sorry, against your house, which is a far less common. And so basically, if you can't repay the loan, then there's security over that. For an unsecured loan, there's just no security. That's kind of like a credit card. So a credit card has no security over it. You can just run up a bill, and if you don't repay it, then it's an unsecured debt. But the problem is that will also be problematic for your credit history. So that's why people like to repay them, and so there's no problems later on. Usually with secured loans, the interest rate's a bit lower. So what you'll pay per year, i.e. the overall cost of the debt too, but not always. So always we suggest just shop around because the interest rates can be quite slim, the differences. You just have to look at like a large number of lenders. How much can you actually borrow? it really is changing right now because of new government legislation, but it's generally around $2,000 is the minimum. Some lenders let you borrow up to, I think, about 200,000, which is quite extreme. But those are for very special situations and things like that where people would have very strong credit. So really, our view is please borrow as little as you need, and make sure that it's enough though for what you need it for, so you don't, under loan, because then you'll have to be scratching around for other finance, and that could be very pricey and also make you problematic with the repayment of the first loan. So also, yeah, and also repaying it as quickly as possible, always a great idea. And for that, we think, shorter borrowing periods, so i.e. 1 year versus 3 years is going to be much cheaper, or 2 years versus 5 years, or 3 years versus 5 years. The shorter the term, the less interest rate. Yes, you'll pay higher repayments every month or every week or whatever, but it is going to bring down the cost of borrowing quite significantly. There are a few things out there like about repayment insurance. We're not huge fans of those. We've written guides about this, PPI, and all that thing, which I've linked below. So do have a read of those. But yeah, as I say, we're always a bit cautious of those. The Australian government has done a lot of studies into those and said that they're not that worthwhile. We can't comment on like an individual case, of course, but just always be cautious of those because they do get added on to the cost of a loan, which makes the loan much more expensive. Now, will a personal loan affect my credit rating? And what happens if I can't repay it? So yeah, the problem is if you can't repay it, then the best suggestion is to look for a hardship application. Like right now, and since the dawn of time, really, with personal loans, there's always been people who just have a struggle to repay them. There's no problem with that. It's just you have to work with the lender. So always do that. And if your loan is secured, and you don't get any hardship application or that sort of lapses, then yeah, there is a risk that your security will be possessed or taken action on. If your loan is unsecured, then it'll be passed on usually to a debt collector, and then they'll chase you, and it's a whole different sort of journey. So we always say, please just be very cautious about taking personal loans at all, because the cost of repaying them is just so high. And as I've said, like this story here, 25%. The amount wasn't significant. It was around $15,000. Well, that is quite significant, but it's not significant in the scheme of things. But the problem is that cost per year in interest alone around, $4,000, and then try to repay that. You're looking at maybe if you could repay it in 3 years, that's paying back $5,000 per year. So 4,000 of interest plus $5,000 of repayment, so $9,000 on a personal loan just to repay it, and that's only a third of it. Of course, the interest rates will drop as you pay more off, but the amount of interest paid will drop as you pay more off, but it's still very, very, very expensive. So please be very, very careful of that, because the higher you go, the more you have to repay back, and the more that costs you. Fixed monthly payments, really understand. So it's really just looking at what you have to pay every month and making sure there's always money for that. Plus, also loan fees get added on to the top of your account. So be aware that those will need to be repaid as well with the interest. Now, moving on from there, we just want to make some slight comments on the alternatives. So, whilst personal loans for many people are suitable, there are a host of alternatives that can avoid long-term debt. Credit card, the answer is that like a good alternative? The answer is, well, that does depend. Uh, if it's for a small purchase that you can repay and then you don't have to get out a personal loan with all the fees associated with it, then yes, it can be cheaper. You can always get long-term interest free cards, but also at the same time, if you don't repay that, then after the interest free term or the no repayment term or both, that becomes really, really pricey. So do be very careful with that. There's also things like balance transfer cards. We always think that with a balance transfer card, there is possibility to repay your loan without too much hassle. but you just have to, be aware with what you're doing. So we've comprehensively written about that. And then lastly, you can look at asking your employer. This is something which people do. Employers have usually cash flow to be able to manage that. They take it out of your wages or salary. So that's an option right there. So that's basically our guide. Please be very careful before getting out any personal loan. Do think about it, because the costs, as we see from other journalists that cover this, it is just so high. And the risk, as I said, with inflation going is what it is, and with interest rates going up, then the cost of borrowing just has to increase. Most of us have not been sort of that familiar with these sort of higher interest rates environments. So ever since 2009, things have been pretty low, and then they dropped around COVID, but they seem to be, on a one-way direction. So whilst this may be different in the years to come, certainly, borrowing is the interest rates that you'll pay is unpredictable. While you may lock in a low interest rate now, or what you think is a low interest rate, if you can't repay it, then it gets rolled over, it gets renewed at a higher interest rate. Thank you very much for watching this summary. What we would suggest is that people compare as many loan companies as possible by getting quotes. We hear too often that people just get one or two loan quotes and think, I'll just go with the cheapest one or something like that. But there's a lot of providers out there. It's not gonna affect your credit by getting quotes. So do consider doing that. It just makes life a lot easier for you if you get a further market sort of idea of what's available. And next to that, if you have any questions, do leave them in the comment section down below. We're highly responsive to comments on YouTube, and we like to make sure that our guides are like the best they possibly can be.